Hello, welcome to European Open Briefing for Monday, January the 28th. I'm Rafi Boyajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar has started the week on a negative footing. It tumbled sharply on Friday as we saw the temporary ending of the US government shutdown lead to some easing of safe haven demand for the greenback. And of course, this week we do have the FOMC meeting. Expectations are that the Fed will be dovish, so all of that is weighing on the greenback. We can see the dollar index recovering marginally from Friday's losses, up by around 0.1%. Against the yen, though, the dollar is down around 0.13% at the moment. So the dollar weakness has lifted gold prices to their highest in 7 months. It broke above the 1,300 level. And oil, though, on the other hand, is down by more than 1% after on Friday we saw the first increase in US oil rigs or oil rig count for 2019. The euro is benefiting from the weaker dollar, recovering. Early it had recovered above the $1.14 level. Sterling remaining not too far from its 3 months highs on Friday. There is optimism that either the May's deal Plan B will pass, or there's going to be an amendment that would extend Article 50. So all of that is helping sterling rally at the moment. If you have a look at the risk-sensitive currencies, the Australian dollar has fallen back slightly from earlier gains. It's actually slightly weaker now against the US dollar. Earlier it did get a bit of a lift from a rally in the Chinese yuan, which rose to 6 months high. So let's take a closer look now at the major pairs. We can see that big tumble in the dollar index on Friday. So the current end to the shutdown is a temporary one. Congress has until February 15th to either provide Trump his money for the Mexican wall, or Trump will probably or we will see the shutdown resuming again. Immediate focus, though, is those trade talks between the US and China. The Chinese Vice Premier will travel to Washington on January 30th. On the same day, the Fed will announce its latest policy decision. Markets are expecting the Fed to confirm its wait-and-see approach. So all of that has been weighing on the greenback as well as lifting gold prices. We can see that big jump in gold on Friday. The Australian dollar getting a bit of a lift on Friday, but this morning it is struggling. Though the yuan, the rally of the yuan has been helping the Aussie a little bit. The yuan rose to 6 months high against the US dollar, and apart from the weaker dollar, we did also see some dollar selling by state-owned Chinese banks, possibly just taking some insurance measures ahead of those trade talks, as well as the Chinese Lunar New Year approaching in early February. Quick look at the euro now. So the euro has rebounded significantly from those lows after the ECB meeting. The focus this week will be on the Eurozone fourth quarter GDP numbers out on Thursday. So the fact that the euro has rebounded, despite the fact that we did see a dovish ECB last week, possibly means that much of the slowdown in the Eurozone has already been priced into the euro. So if the dollar was to weaken further, the euro could see further recovery. As for sterling, we've got that Plan B vote in Parliament tomorrow. There's talk that the DUP and even some other Conservatives could back May's deal if she's able to win from the EU. Further concessions such as making the Irish backstop time limited. There's also talk that of another amendment that could possibly extend Article 50. So all of that has buoyed sterling to 3 months highs. It's currently trading around 1.3160. So that's it from me. Thank you very much for watching and have a great day.